Thanks for joining us today, Anton. I was just wondering if you could spare a few minutes to talk about what's been happening in the markets for the last few months.
Yeah, so clearly we started off 2013, the market started off very strongly, and we had a pullback in March. We've seen extra volatility in April. I think obviously one of the things that's causing the strength in the market is lower interest rates, not just around the world, but we've seen interest rate cuts here in Australia, and there is the expectation that we'll see further cuts. So what we're seeing is the world is awash with money, and people are still chasing yield. And what we've seen in the last few weeks, we've seen that story. I think investors generally becoming more concerned about global growth, and we've seen bonds around the world strengthen. We've seen commodities come off quite strongly, and we've seen more and more money targeting income-producing shares. So anything with yield at the moment is being chased quite aggressively by many investors. What's happening is many of these stocks that are income producing are currently being, their prices are very high, the banks, Telstra, and in our view many of these things are looking fairly fully valued. So the challenge now for the portfolio is to, we have to take some profits on some of these sectors which are being strongly re-rated, and look for other things to buy which in our view offer better value, and we have been doing that across the portfolio. Some stocks we've been buying are sort of laggards, for example in the healthcare. Stocks like Ansell and Sonic have actually not performed that well in the last 12-18 months. In our view, over the next 3 to 5 years they still look like very good stocks. We've also been buying a few resource stocks on the back foot, companies like BHP. We're not big fans of resources, but they are so out of favour at the moment. And many of these companies are in a very strong financial position. So companies like BHP, and Woodside, we have topped up in recent weeks. Woodside's just increased their dividend payout, which is good. BHP at the moment have got quite a bit to spend on capex, but we should be in a position to lift their dividend in say 12 months time. But around current prices of $30, they look reasonably, reasonable value compared to many other parts of the market.